We're seeing a lot of availability of debt. Competition has gained quite significantly, especially in the senior debt space for both UK and Germany. Germany, we have the Pfandbrief Bank that has been opened for throughout the cycle, and that's kept the German property markets quite robust, I would say. The question is how long can that last when lenders are lending at 1% all-in costs? Are they pricing credit, or are they pricing opportunity cost, basically? And we're seeing a lot more mezzanine providers, and we ourselves are going up the debt stack, actually. So we'll go up to 80% loan to value, either on a whole loan or do mezz only, or do senior. And I think a lot more people are exploring development finance. We included in that mix. So ticket sizes. 2 years ago, 3 years ago, I think we were one of the few that could do 100 million at a crack, and now pretty much almost everybody can, it seems like. And the typical deal size now is around 70 million to 100, and we're seeing deal sizes now increase to 200, 300, 400 million, where people will do all of that themselves. So it's definitely a rapidly changing market. What we haven't seen is CMBS come back, which is interesting. We've seen a little bit there, but we don't expect that to really explode like it did back in 04, 05, and 06, partially because, one, it's very hard, it's difficult treatment under Basel III, as well as Solvency II. So I think it becomes more of an alternative lender type of market, similar to moving more towards the US model, where 50% of it is banks and 50% alternative.
Okay, so that move is going to be much more towards that US model. You think that's a change that's here to stay, if you like?
I think if you look at Europe, there was no insurance companies really in 2006 that were investing in debt, and now there's a few of us that are doing that. Pension funds. So it's a long-term education process that's bringing in the long-term capital of insurance companies and pension funds. And now that that's started, now we're seeing that trend continue. We expect that to continue on as long as there's good relative value compared to what I can get on government yields and also corporates.